Joining me now in studio, as promised, is Eddie Ghabour. He's managing partner and co-founder at Key Advisors Group. Eddie, great to have you on the show, especially in person.
Thank you. It's great to be here.
And a lot to talk about when it comes to markets, certainly this week between that Fed decision, tech earnings, and more news out of the artificial intelligence space. How does the market look to you right now?
So DeepSeek threw a big curveball at us. You know, we had a webinar for our clients this past week and said it's going to be all about the Fed and the earnings and what these companies are going to say in regards to earnings during their call, because expectations are for growth to accelerate for a lot of these firms. And DeepSeek threw a wrench in that in regards to the big reaction. So right now, I would say the overall market actually looks really good, because yesterday, all the focus was on DeepSeek and NVIDIA losing 16, 17%, but 70% of the S&P was actually in the green yesterday. So that broadening out actually is very bullish from our perspective and healthy from a market standpoint. In regards, this is why we bought yesterday. We thought when we saw the DeepSeek news and saw a broad-based sell-off across the board, we picked at some financials and some small caps and things like that that didn't really relate to that headline event that caused that big sell-off in tech.
I think for some perspective as well, Eddie, to help clarify this for our viewers, we had seen NVIDIA rise, I think, more than 100% last year at the same time that the S&P was up a little bit more than 20%, right?
That's exactly right. And we own NVIDIA for our clients, for full disclosure, and it's been a great stock. No one likes to see that big of a move in one day, but to your point, it's had massive growth. And this isn't the first time NVIDIA's had this type of move. Just in the last 24 months, we've seen this happen 2 to 3 times. And so patience and not overreacting generally wins in a scenario like that.
Let's pivot to the Fed decision, because, of course, that meeting starts today. The decision will come tomorrow before we start hearing from some of these large technology companies after the close on Wednesday. What's your expectation from the Fed?
I think the Fed is going to come across as somewhat accommodative to those that want rate cuts, but they're not going to cut rates this meeting, and I don't think they should. I think they're going to be data dependent, and I think if Powell says that in this press conference is going to be data dependent and continues to talk about they believe that inflation is trending in their direction, it could give the market a nice pop. But the way he answers those questions are so scrutinized, and any indication of him not wanting to do any cuts this year will be very, very bearish short term for the market. We will get a sell-off. At the end of the day, I actually think it will be healthier if we don't need rate cuts, because that means the economy is doing really, really well.
I do want to ask about President Trump's comment to the World Economic Forum virtually last week that he wants to see lower interest rates. We know, obviously, the way that the Federal Reserve is set up, it is an independent body that sets the course for rates. How might that be at play tomorrow for our viewers to prepare for?
So actually, there's two, and when it comes to interest rates, to me, the most important thing is the 10-year bond. And from the time the Fed started cutting rates, the bond market actually went up. So interest rates actually went up when the Fed was cutting rates. So I think if they don't cut rates, that the bond market will be okay with that. And that's where I think the big disconnect is here. So if you want interest rates to come down, you need to keep policy tight. If not, interest rates are going to go higher.
Interesting. Now let's turn to those technology results, because I'm sure in the wake of the news yesterday, specifically toward artificial intelligence, that this will be something that these technology companies need to address in the coming days. Is that right?
It is. That's going to be the number one question that they're going to get, is how does DeepSeek impact future investments? And there's going to be winners and losers, again, if this DeepSeek technology is real and these companies are allowed to use it. Because if you think about it, if it's going to reduce the amount of money they have to invest, for some companies that's going to be good, but for companies like NVIDIA, that will be a bad thing. So there'll be winners and losers in this, but they're going to have to answer that question to satisfy Wall Street, or there'll be more selling in the AI names.
What is it about this Chinese competitor that could potentially be a threat to America?
Well, the thing of it is their privacy statement says that they are able to, that they collect your data and store your data, okay? And we just got a ban on TikTok because of it potentially being a threat. I can't imagine allowing all U.S. citizens to download this app from China where they can collect all of your data. To me, if you think TikTok is a threat, this also has to be a threat. The other thing too is I'm not so sure it passes a sniff test in regards to $5 or $6 million investment, and in 2 months they created something that is faster and more efficient than what we have spent hundreds and hundreds of millions of dollars and years on. So, I kind of take it with a grain of salt in regards to the source, because I would have to believe that they would have spent a lot more money on that. And the other question that we don't know is, how many NVIDIA chips did they actually use in developing this? And that's still, we don't really know. So right now, it's kind of a wait and see scenario.
Interesting. Now, when it comes to these technology names, just their bread and butter, what we expect on the top and the bottom lines, how does that business model for these companies, each one a little bit different, look to you?
So I think the AI names actually are going to have the biggest hurdle to beat, right? Like NVIDIA, when you look at a company like them, they have had such earnings growth and revenue acceleration. It's going to be hard to beat it. So we actually expect their revenue to decelerate. And then you look at names like Meta, they actually benefit in this environment where the investments in AI, as well as small business sentiment, has soared since the election. And they rely a lot on ads from small businesses. So we're really bullish on Meta. We own Meta, and we think they are a name that can thrive in this environment. And then there's going to be some losers in the tech space as well.
You mentioned financials earlier, and certainly they would benefit from more deals. They would benefit from market volatility. We've had many people come on the show, and market watchers in general say that this year could be more choppy, right? After 2 very strong years of the bull market. Can choppiness be a good thing?
It can be. The only thing is it's going to test people's nerves. I don't think just buy and hold a broad-based basket is going to work this year. We have said 2025 is going to be challenging and extremely volatile. And I do think there's going to be an air pocket because of the inflation problem that we have, that we may have to navigate a 15 to 20% correction in the broad market some point in time this year. We've told clients we think that'll be an event that starts to materialize in the second quarter. But look at what happened in the video. You wake up one day, you think everything's fine. The next day it's down 17%. That can and probably will happen again at some point in time this year. So it's going to be a challenging market, but I think at the end of the year it'll be good.
Quickly, Eddie, what would be behind that, a 20% drop?
Inflation accelerating because of the growth accelerating and the 10-year bond going to 5%. I think that's a real scenario that's going to happen this year.
All right, Eddie Ghabour, managing partner and co-founder at Key Advisors Group, joining me in studio. Eddie, thank you.
Thank you.